Hey everyone, I'm Tim Wills and welcome back to the channel. In this video we're going to be talking about the My Food Bag IPO, which is happening on Friday the 5th of March, what it is and if it's worth investing into. Of course this video is for entertainment purposes only. I'm just a guy on the internet, so do with that what you will. If you don't know what an IPO is, it's an initial public offering. They're usually offered to big institutional firms like banks and private equity companies, but often companies like Sharesies will also buy into it and act as a middleman, I suppose, so to sell their shares to investors like you and I. So I guess it does also extend to retail investors. An IPO is predominantly used to raise capital for the firm if they're growing, or give existing shareholders a chance to cash out on their investments. The problem with IPOs are they are super expensive. This one, the My Food Bag offer, costs $16.7 million all up to do, and the alternative to an IPO is what's called a compliance listing, which is a lot cheaper. You don't need to jump through as many hoops, and you do still get listed on the NZX or a stock exchange, but they don't draw in a big shareholder base, which are people who have a vested interest in the company and can be used to fund future investments down the track. The IPO is based on demand from institutional investors. In this case, it was priced at $1.85. More demand from institutional investors, the price is going to be higher. The less demand, obviously, the less the price is. But this is a real balancing act, and it's incredibly hard for the investment banks to get the price right. In fact, a real example of them getting it wrong is the Uber IPO. They priced the stock at $45 and went public in mid-2019. And by the end of 2019, the price was $27, which is almost half of what it started as. So you can imagine there was a lot of angry people. But the same can happen the other way around. If the IPO is priced too low, existing investors are going to feel like they missed out. They left money on the table. So it can be incredibly hard to price an IPO. Well, it is incredibly hard to price, but for this one, it's set at $1.85. Only time will tell if that was the right choice. Okay, let's talk about My Food Bag as a company, because it's no longer a family-owned business, or it never really was. And everyone associates Nadia Lim with it, and everyone sort of thinks she has an involvement in it, which she does, but there's more of a publicity role. She's not involved in the day-to-day operations of it or the recipe creation, that sort of thing. And she has a relatively small stake in the business. The Badgery Lim Family Trust, which she is a part of, own 5.69% of the company. So what about the other 95%? Who owns that? The other founding shareholders are Cecilia and James Robinson, who own 11.18%, and Teresa Gatong, who owns 10.24%. The other major shareholder who wasn't a founding member and is, well, the major shareholder in the company, is a private equity firm called Waterman Capital. They own 2/3 of it and bought into it back in 2016. According to the IPO, this company is worth just under $450 million. So why do they need the money, and what will it be used for? This is where it gets slightly concerning. Usually a company that is in growth stage, which My Food Bag claims to be in, will usually use the IPO to raise money to invest back into the company and continue to grow. But let's look at what they will actually be spending the money on. This is found in the PDS, the Product Disclosure Statement, and it details everything that the money will be spent on. Okay, so the first thing in this is $38.2 million to repay bank debt. I don't know the exact reason behind this. In my opinion, I would have thought the cost of debt would be far less than the cost of equity, especially because they plan on paying a dividend. But anyway, $16.7 million to pay for offer cost. You can't really avoid this, so yeah, whatever. These next two are interesting though, and $193.9 million to Waterman Capital. They're the private equity firm and they're the largest shareholder at the moment. Now, even though this is the largest use of the proceeds from the IPO, I don't think it's actually all that significant. It is, after all, a private equity firm, and they usually cash out when an IPO happens. It's just part of their business model. The concerning part is the next one, and then I suppose the lack of the fifth option. So $93.4 million will go towards the other existing shareholders. This represents about 3/4 of their existing stake in the company, which is a huge amount, and to me shows a massive no vote in confidence for the company. On one hand, you've got the company talking about how they're going to grow and expand within the New Zealand market, and then on the other hand, you've got the founding members selling 3/4 of their stake. They don't quite line up, do they? The last point I wanted to make was the lack of the fifth option. There's no mention that they're going to use this money to invest in the company's growth. It seems like they're just using the IPO to give existing investors a chance to cash out. Okay, so let's look a little bit more at the business model of My Food Bag and why they might have chosen now is a good time to release this IPO offer, because there's something I think they've done that is slightly devious. Let's not forget that they were the first of their kind in New Zealand to do this meal kit delivery, and I think the first starter does get a bit of an edge. But at the same time, they are under incredible pressure from the German giant HelloFresh. You've probably seen their advertising all over social media and TV. They're doing a huge push to take over the market, and they're doing an incredible job at it. In fact, they have overtaken My Food Bag as the largest meal kit delivery provider in the last 2 quarters. And they've only been in New Zealand for about a third of the time. I think they entered in 2018. And they are a giant. HelloFresh has a market cap of $11 billion, which is 25 times the size of My Food Bag, and means they can survive heavy losses for a long time, if needed, if they really need to solidify their position in the New Zealand market. Okay, what about growth? Now, they do have a growth strategy. It's on page 42 of their PDS here. But it's rather uninspiring. They talk about refining their operational activities and supply chain, improving their customer retention, and expanding their product offerings. They do have an incredibly high churn rate. Currently, they have a 40% month-to-month churn rate, which means every month about 40% of their customer base leaves. So a lot of money is spent on advertising to bring in new customers on a month-to-month basis. So improving their customer retention, that's a really good chance to grow their revenue. They've also said at this stage they're not looking to expand into other markets overseas. They did try to get into the Australian market about 3 years ago, but have since pulled out. I'd suggest this is because most of their marketing is done through Nadia Lim, and she doesn't have much of a presence. She isn't all that well known in Australia, so they might have had a hard time adapting their marketing. There's one other thing I wanted to add, and I'm going to end on this point, and it's to do with the timing of their offer. In the last year, there's been a huge increase in the amount of people buying meal kits. This has been caused, in my opinion, by COVID. Lots of lockdowns, disruptions, some people wanting to avoid supermarkets for their own safety. In my opinion, this is the reason for the big spike in revenue of My Food Bag over the last year. And the IPO offer has sort of priced this into their model, assuming that the revenue is going to keep increasing at the same or a similar rate. The question you've got to ask yourself before investing then is, when everything eventually starts to get back to normal, will My Food Bag be able to retain the customer base it required throughout COVID? Thank you so much for watching. If you like this type of content, please consider subscribing, and I'll see you back here next time.